Welcome, everyone. Ready to deep dive into how to make money in stocks? William O'Neill, the author, has got some fascinating ideas in this book.
Yeah.
You've given us some really interesting excerpts. It's like a roadmap to success in the stock market.
It really is. And what's so cool about O'Neill is that he's not just, some random guy with theories. He's got tons of real-world experience. I mean, he founded a successful investment research firm. He created a mutual fund. He even started a national business newspaper, Investors Business Daily. So this guy knows his stuff.
Yeah, for sure. So in this deep dive, we're going to try to uncover those secrets of his winning system. What is it? CANSLIM?
CANSLIM, that's it.
It's kind of catchy, isn't it?
Yeah.
We're going to learn how to read charts like a pro, and of course we'll explore those common pitfalls that trip up even experienced investors.
And we'll do it all while keeping your learning style in mind so you can actually use this stuff.
Exactly. Let's start with this CANSLIM thing. It sounds kind of like a secret code.
Yeah. It is kind of like a secret code, but it's actually a really powerful checklist for identifying stocks that have, that winning potential. And the cool thing about it is it combines both fundamental analysis, like looking at the company's financials, and then market analysis, which is how the stock is actually performing out there in the wild market.
So it's a holistic approach. You're looking at the whole picture.
A whole picture, that's it. You got it. And so the C, the first part of the code, stands for current quarterly earnings per share. And O'Neill really stresses that you want to see, strong recent earnings growth, not just a little increase, but a big jump. Something to get investors excited,
Okay, but why is this so important? I mean, isn't consistent growth over time more important than one good quarter?
That's a great question. It is all about momentum. And O'Neill found in his research that 3 out of 4 top-performing stocks had massive earnings increases, we're talking 70% or more, in their last reported quarter, right before their price took off. They didn't just grow, they exploded. So it seems like that recent explosive growth, it's a better sign of future success than just, a steady history of small gains.
Oh, that's interesting. So it's not enough to just look at whether a company is profitable. You have to see that their profits are actually, accelerating rapidly.
That's exactly it. And that brings us to the A in CANSLIM.
Yeah.
Annual earnings increases. So we look for the short-term momentum with the quarterly earnings, but now we want to see, okay, what about the long-term growth? Has this company been building value consistently? And O'Neill wants to see a history of solid annual increases, think 25% to 50% or more, ideally.
So you're trying to find that sweet spot between, that explosive recent growth, but also that consistent long-term performance.
Right. You want them both. And here's where O'Neill kind of challenges a common investing metric that everybody's always talking about.
Would you?
The PE ratio.
Okay, yeah.
He says, don't get too hung up on that. Strong earnings growth, he argues, is a much more reliable indicator of a company's potential than just a low PE ratio, which can be very misleading.
That is interesting. So we shouldn't get too focused on the PE ratio. It's more about that earnings growth.
Earnings growth, exactly.
Yeah.
And now this is where things get really interesting, the N.
Okay.
New products, new management, new highs. O'Neill loves companies that are kind of shaking things up. They're bringing something new to the table, They're not just doing the same old thing.
So you're talking about innovation, new leadership, maybe a stock hitting a new all-time high.
All those things, yeah. And the reason this new factor is so important is because it creates this buzz in the market, It attracts attention, it gets people excited, and that can really drive demand for that stock.
It's like creating a hype machine almost.
Yeah, exactly. And think about it. Remember Wang Labs back in the day?
Yo, I know.
They had those word processing machines that just took the business world by storm.
Oh, okay.
That was their new product. They got a ton of attention and their stock just went crazy. Another example, Price Company. Maybe you remember them.
Yeah, vaguely.
They had those, revolutionary wholesale warehouse stores.
Yeah.
And that newness factor, it just disrupted the retail industry and led to incredible success for them.
Yeah, and they were bought by Costco, right?
Exactly, yeah.
Okay.
So what O'Neill is saying here is you should be looking for companies that are creating that buzz. They're grabbing those headlines. They're not just growing steadily, but they're really pushing the boundaries. They're game changers.
I like that. Game changers. So we've got C, we've got A, we've got N. What's next?
S. And this one you should know.
Okay.
It's supply and demand.
Basic economics.
Exactly. It's like economics 101, but O'Neill applies it so masterfully to picking stocks. He really likes companies with a smaller number of shares outstanding,
Okay, but why is that?
Well, because it makes the stock more sensitive to buying pressure. Think of it like a limited edition sneaker. The fewer there are out
The
there,
more valuable it is.
exactly,
Yeah.
the higher the demand, and the price is going to climb faster.
Okay, yeah, that makes sense.
Yeah.
But don't we also have to consider, like, the massive influence of these institutional investors?
Like who?
Like those big mutual funds. I mean, they can move markets with their buying and selling power, right?
Oh, yeah, yeah, for sure. And it can feel kind of intimidating to think that, you're trying to compete with those giants.
Yeah. For sure.
But O'Neill has a really interesting point about this. He says that individual investors, us, we actually have a unique advantage.
What is it?
Well, those big institutions, they often have to focus on the larger, more well-established companies,
No.
the ones with really high market caps, because they have to deploy so much capital. But you and I, as individual investors, we can explore those smaller companies, the ones that are maybe a little bit overlooked. They've got a lower market cap, but they might have explosive growth potential.
Oh, interesting. So I guess it's like, yeah, be aware of what the big institutions are doing, but don't just blindly follow their lead.
Yeah, and don't be afraid to venture off the beaten path a little bit.
Okay. So we've got C, A, N, and S. What's L?
L is for leader or laggard. And this one's all about riding the wave of success.
So you're saying we need to identify those companies that are the best in their industries, the ones that are setting the pace.
The ones that are setting the pace, exactly. The ones that are showing that strongest relative strength compared to all their competitors. If you're choosing between a thoroughbred racehorse and a donkey for a race.
You're going to bet on the horse.
You're betting on the horse, exactly.
Yeah.
The horse that's got a track record,
Yeah.
O'Neill says choose those industry leaders, the companies that are really demonstrating strength,
But I guess he's also saying, watch out for those stocks that are just kind of going up because others in their industry are going up.
Yeah, he calls those sympathy moves.
Okay.
They might not have genuine strength on their own.
So you really have to separate the true leaders from those, like you said, just the passengers.
Exactly. Okay, so we're at CANSL. So what's next? Institutional sponsorship.
Okay. Now this is interesting because earlier we were talking about how we shouldn't be blindly following these big institutional investors, right?
Right.
But now you're saying we should pay attention to them.
Yeah, it might sound like a contradiction, but it's not really. We're not saying completely ignore them. We can actually learn from their moves, but we shouldn't be blindly following them. Yeah.
So it's more about observing.
Observing, that's it. Yeah.
Yeah.
Recognizing the trends, where are they putting their bets?
Okay, so it's not about mimicking their every move. It's more about seeing the bigger picture.
Exactly, exactly. And remember, those institutions, they have massive resources. They have whole teams of analysts doing research. So when they're involved in a company, it can be a signal, like a vote of confidence, especially if you see that, that trend of institutional sponsorship is growing. But
There's always a but.
yeah, but be careful. Be wary of those stocks that are over-owned by institutions.
That we're around.
Yeah, where there's too much concentration.
Okay.
Because if everybody's already in that stock,
Right.
and then things turn south, it can create massive selling pressure.
It's like everybody trying to get out of a crowded theater at the same time.
Exactly. Okay, so last but not least, market direction.
Yep.
And this is where understanding the bigger picture, the overall market trends, it becomes really, really important.
Okay. So you're saying even if I found the perfect stock using all those other criteria, if the overall market is tanking, it's not going to matter.
Pretty much, yeah. I mean, you could have the best boat in the world, but if you're sailing against a hurricane,
Yeah, you're not going anywhere.
you're going nowhere fast. O'Neill really stresses, you got to recognize those market trends. Are we in a bull market where prices are generally rising or a bear market where they're falling? And you have to adjust your strategy accordingly.
So this is where learning to read charts and understand those market indicators becomes super important.
Super important, yeah.
It's about knowing when to set sail and when to stay in port, right?
Yeah, exactly. And O'Neill gives some fantastic tips for spotting those market tops and bottoms. One thing he says is to look for divergences between different market averages, where one index might be hinting that things are about to change direction,
Yeah.
while others haven't caught on yet.
It's like seeing those first cracks in a dam before it bursts.
Exactly.
Oh.
Exactly. So even though we've been really focused on individual stocks here, it's important to remember that you got to keep an eye on that broader market. It's like checking the weather forecast before you go for a hike.
You don't want to get caught in the rain.
Exactly.
Okay, so we've covered the first part of O'Neill's system, which is all about identifying those promising companies, the ones that have that potential to soar.
The ones that are ready to take off.
But what about the other side of the coin? Knowing when to sell.
Ah, yes. When to sell, whether it's to lock in profits or to cut your losses.
That's what I want to know. That's
Yeah.
what gets me. Even if you've picked a winner, knowing when to actually exit, that's the tricky part.
It is tricky. Even the best investors get this wrong sometimes.
Yeah.
And O'Neill's whole philosophy is about, minimizing those losses and maximizing your gains, obviously.
Okay, so are you ready to, crack the code of knowing when to sell?
Let's crack that code.
Okay, so we've learned how to find those promising stocks using the CAN SLIM system, but even the best investors, like you said, they make mistakes.
Yeah.
So what does O'Neill say about knowing when to cut your losses?
Well, this is where discipline and emotional control, those become your superpowers in the market.
Okay.
O'Neill's whole philosophy is to accept that losses, they're part of the game.
You can't avoid them, right?
You can't avoid them completely. Even the most skilled investors are going to have losses sometimes. The key is to minimize them, right? Don't let them get out of control.
Right.
So he recommends setting a firm sell point, usually around 7% or 8% below your purchase price. And here's the crucial part, stick to it.
Okay.
Even if you really believe in the company, if it drops below that threshold,
Get out.
you got to get out. Don't get emotionally attached to it and let those losses just, spiral out of control.
So even if, you think the company have good long-term prospects, you should still cut your losses if it hits that, that 7% or 8% mark.
Absolutely, yeah. O'Neill is really adamant about this. He even says, and I quote, "Letting your losses run is the most serious mistake made by almost all investors."
Wow.
It's tough, I know, but it's a really vital lesson if you want to be successful in the market.
Okay, that makes sense. So it's almost like pruning a plant. You're cutting off those dead branches
Yeah.
so the healthy ones can flourish.
Exactly, you got it. So we're removing the dead weight from our portfolio and letting those strong investments grow. Now, let's flip the script. Let's talk about the other side. How do we know when to sell and take our profits?
Yeah, because that's tricky too.
It is tricky. It's so easy to get greedy, right?
Oh, yeah.
You see a stock going up and you just think, oh, it's going to keep going up forever, but
It doesn't?
it doesn't. And O'Neill, he's got a strategy to avoid falling into that trap.
Oh.
He recommends selling on the way up.
Okay.
While the stock is still advancing, it still looks strong. You're not trying to time that absolute peak, because that's almost impossible to do.
Right.
But you are looking for signs that maybe the momentum is starting to wane a little bit.
Okay.
And he actually gives a bunch of specific selling signals to help you with this.
Okay, good.
One approach is to analyze those chart patterns that we talked about.
Yeah.
Remember, a break below a key support level, that might be a sign that the upward trend is reversing.
So learning how to read those charts is really important here.
Yeah, it all comes back to that, doesn't it? Another thing to watch for is distribution. That's when those big investors, the institutions, they start selling their shares.
Okay.
And you can often spot this by looking at the volume. If you see a big increase in volume, but the price isn't really going up,
That's not a good sign.
that's a red flag. It's
Right.
those smart money investors, they're starting to head for the exits.
Oh, I get it. What about just volume in general? Are there any patterns we should be looking for there?
Yeah, volume is really important. O'Neill says watch for those volume spikes, especially on upward price moves. So if a stock is going up in price, but the volume is low, it might be a sign of weakness.
Okay.
Imagine a party with only a few people there.
Right.
It's probably not going to last very long.
Right, exactly.
But if the volume is strong, a really packed party, lots of energy,
That's a good sign.
that's a good sign. It suggests there's genuine buying interest there, and it's driving that price up.
I like that analogy. It's very visual. Okay, so we've talked about chart patterns. We've talked about volume. What else?
Another thing to consider is relative strength.
Oh, yeah, we talked about that with the L in CAN SLIM.
Yeah.
But how does that apply to selling?
Well, if a stock's relative strength starts to weaken, even if the price is still going up,
Okay.
it could be a sign that it's losing momentum compared to its peers.
So even if it's technically a winner,
Yeah.
you have to compare it to how the other companies in that industry are doing.
You got to look at the whole picture. If it's starting to lag behind, maybe it's time to take those profits and look for a new leader.
I see. Okay. So it sounds like O'Neill's selling strategies, it's all about being proactive, being disciplined,
Exactly.
being objective.
Yeah. It's not about emotions. It's not about guesswork. It's about recognizing the signals and taking action.
I like that. So we've covered like all the elements of O'Neill's approach.
We have, yeah.
It seems like a really comprehensive system. Like it helps you make those like informed decisions at every stage.
It does. It's not just about finding those great stocks. It's about managing your portfolio, knowing when to hold them, when to sell them,
Right.
and, being able to ride those ups and downs of the market without getting too emotional about it.
Okay. Now, let's talk about some of those common mistakes that investors make. What are some of those pitfalls that O'Neill highlights that we should, try to avoid?
Oh, he talks about this a lot in his book. One big one is over-diversification.
Okay.
A lot of investors think, oh, I got to spread my money across tons of different stocks to reduce my risks.
Right.
But O'Neill actually argues that too much diversification, it can actually hurt your returns.
Oh, interesting. So it's almost like trying to be a jack of all trades, but a master of none.
Exactly.
You're spreading yourself too thin.
Exactly. You're not really excelling in any particular area. So instead of spreading yourself thin, O'Neill says, look, focus on a smaller number of really high-quality stocks, the ones that meet your criteria, your CAMSLIM criteria.
Right.
Remember, it's about quality over quantity. Do your research, find those companies with the real potential, and then have the conviction to invest in them with a meaningful amount of money.
Okay, that makes sense.
Yeah.
So focus, don't get distracted. What else?
Another mistake he warns against is getting emotionally attached to companies or industries. It's easy to fall in love with a stock, especially if it's been doing well for you.
Right.
But, sometimes you got to be willing to let go, if the fundamentals of the company have changed.
Right.
Or it's no longer meeting your investment criteria.
Right.
You got to be willing to move on. Don't let past performance cloud your judgment.
It's hard to let go sometimes, though. It's almost like holding on to a favorite childhood toy.
I know.
Even though you've outgrown it.
But we got to be rational.
Right.
It's business. It's not personal.
Yeah. Emotions can really mess things up.
Yeah.
What else?
Well, speaking of emotions, O'Neill also warns against letting fear and greed drive your investment decisions.
Okay.
Fear can make you miss out on those great opportunities. And greed can make you make those impulsive decisions that you end up regretting later. It's like being lost in a forest. Fear might paralyze you, keep you from moving forward.
Okay.
But greed, that might lead you down a dangerous path.
I see. So how do we find that balance between being cautious, but also, not letting fear hold us back?
That's the million-dollar question, right?
Right.
It's about taking calculated risks, but not letting your emotions take over. Always try to act from a place of knowledge, from clear-headed analysis. Now, this is something that can be a bit scary for new investors.
What's
but
that?
Charts.
Charts, yeah.
O'Neill, he's a big believer in using charts to analyze those price patterns, to help identify those buying opportunities.
Right.
And I know charts can seem a little intimidating at first.
Right.
They can look complex, but they're really just a visual representation of a stock's price history.
Okay.
And once you learn how to read them,
It can be really valuable.
and incredibly valuable. So what are some things we should be looking for? O'Neill talks about a lot of patterns that can signal a potential breakout. One of his favorites is the cup with handle pattern.
Okay. The cup with a handle. It's shaped like a cup with a handle, right? I've heard of this one.
Exactly, yeah.
Well, what does it actually tell us?
Well, it suggests that the stock, it's taking a bit of a breather after, a period of going up,
All right.
consolidating its gains, before making another move higher.
So the cup is like the pullback, and the handle is like the consolidation before it breaks out.
You got it.
Okay.
And he actually gives a great example in his book, C Containers Inc. This stock formed a classic cup with handle pattern.
Okay.
And then what happened? It gained over 550% in just 2 years.
Wow. Okay. So this is not just theoretical stuff. This is something that's actually played out in real life.
Exactly.
Okay. And the cup with handle, that's just one of many patterns that he talks about.
Right. He also mentions double bottom formations.
Okay.
That can signal a potential reversal in a downtrend. So imagine a stock, it hits a low point, right? Bounces back a bit, retests that low, and then surges upward.
So it's like the stock is testing its support level before it makes a comeback.
Exactly.
There.
And he also talks about watching for volume drying up near those lows.
What does that mean, volume drying up?
It means the selling pressure is weakening.
Okay.
There are fewer shares available. It's almost like a drought.
Okay.
But instead of water drying up, It's the sellers.
It's the sellers that are scarce, and that can be a really good sign.
Okay.
It signals a shift in sentiment. Maybe the stock's about to attract more buyers.
So it's not just about, like, the price action itself. You have to look at the volume, too.
You got to look at it all together, price and volume.
Wow.
He also talks about, like, tight price areas.
What are those?
That's where the stock's daily price range, it narrows significantly. It gets really tight.
Okay.
Imagine, like, compressing a spring.
Okay.
The tighter it gets, the more potential energy it builds up, right?
The release.
Yeah, and then boom, it explodes.
Okay.
So a tight price area, that can be a signal that a stock is coiling up. It's getting ready to make a big move.
So we got to watch for those subtle clues, not just the big swings.
Exactly.
Okay. Well, we've covered a lot of ground.
We have, yeah.
We've gone through CAN, SLIM, chart reading, those common investor mistakes. But what's the one thing, like the big takeaway, that you want our listener to walk away with today? I'd say the most important thing is that investing, it doesn't have to be a mystery.
Okay.
With the right knowledge, the right tools, the right mindset, anyone can learn how to do this.
Yeah.
Anyone can achieve their financial dreams. O'Neill's book, it's a great place to start.
It is.
But it really is just the beginning of the journey.
It's like learning the alphabet.
Yeah, exactly.
You got to learn the letters before you can write a book.
You got it. And remember what O'Neill himself says. Have courage, be positive, and don't ever give up. Great opportunities occur every year in America. Get yourself prepared and go for it.
I love that. I love that quote. Okay, so we've talked about identifying promising stocks, managing our portfolio, avoiding those common mistakes, but I feel like there's a lot more to explore, right?
Oh, yeah, there's a whole lot more. O'Neill's book is packed with wisdom. We've only scratched the surface.
Okay, so let's keep going. Let's dig even deeper into O'Neill's insights and see what else we can uncover.
Sounds good to me.
We've talked a lot about discipline and emotional control, when it comes to investing. And it seems like O'Neill really walks the walk. I was reading about how he had this one year where he barely broke even.
Oh, yeah, I remember that story.
Even though he had picked all the right stocks.
He had the right stocks, but his problem wasn't the picking, it was the selling.
The selling.
Or I guess the lack of selling.
Oh.
He didn't have a clear strategy.
Right.
So he spent months really analyzing his mistakes,
Yeah.
And that's what led him to develop those really clear selling rules and that whole market timing system that he's so well known for.
So he basically turned a failure into a breakthrough.
Exactly.
I mean, it's kind of inspiring, right? It shows that even someone like O'Neill, who's considered like an investing guru.
He's still human.
He's still human, yeah.
He still makes mistakes.
He has to constantly learn and adapt.
All the time. And I think it just reinforces what we've been saying all along, Investing, it's a continuous journey.
It's not a one-time thing.
Yeah.
You have to keep learning, keep refining your approach.
You got it. O'Neill didn't just figure it out and then stop,
Right.
He kept studying the market, he analyzed his trades, he was always looking for ways to improve.
It's a good reminder for all of us that, to be successful at anything, but especially in the stock market, it takes consistent effort.
Yeah.
And you got to be dedicated to learning.
Lifelong learning.
Yeah.
You can't just coast and expect to do well.
Now, you mentioned something earlier, a bias, a psychological bias.
Oh, yeah, the price paid bias.
The price paid bias. Okay, this is fascinating to me because, we're talking about investing, but now we're bringing in psychology.
Yeah, it plays a big role.
So how does this bias, how does it affect us? How does it affect our decisions?
Well, it's this tendency that we have to make decisions based on, the price we paid for a stock, rather than its actual value today, what it's worth now and what its potential is.
Yeah.
So, for example, if a stock goes up a little bit,
Yeah.
we might be quick to sell it just to, lock in a profit,
Right.
even if it has way more room to run.
I see. So we're letting that original price kind of hold us back.
Yeah, it's like an anchor. Or on the other hand, we might hold on to a losing stock way too long, hoping it'll go back up to that price we paid, even though, the company's not doing well anymore.
Yeah. Yeah, I've been there. It's hard to admit defeat, right?
It is. It is. But O'Neill, he suggests a really simple technique to overcome this. He says, track your investments based on the percentage change.
Okay.
From your last evaluation.
So not the original price.
Not the original price. You're shifting your focus to the actual performance.
Okay. So it's about looking at it objectively.
Exactly.
How is the stock actually doing, in the present moment.
You got it. And it helps you detach from that emotional baggage of what you paid for it.
Yeah.
You can make a clear decision. Now, speaking of emotions, O'Neill has a really interesting perspective on fear and greed.
Okay, let's hear it.
He argues that the best time to buy is often when you are scared to death,
What?
when everybody else is panicking.
Okay, that's counterintuitive.
It is, but he's basically saying, be a contrarian, go against the herd.
Right.
When fear is ruling the market, that's when you're going to find those real opportunities.
But most people, they're running for the hills when things get shaky.
I know. But O'Neill's research and his own experience, it shows that if you can stay calm, do your research, and you're confident in your analysis, buying when everyone else is fearful, that's when you can make some serious money.
Okay, so it's about, almost like being greedy when others are fearful, right?
Exactly.
It's like that famous Warren Buffett quote.
Exactly. Be fearful when others are greedy and greedy when others are fearful.
Right.
It's all about thinking independently.
Don't just follow the crowd.
Exactly. The crowd is often wrong.
Okay, so we've covered a lot. We've got CAN, SLIM, we've got those chart patterns, we've talked about psychology. What else? What are some key takeaways that we haven't mentioned yet that our listener should keep in mind?
Well, O'Neill talks a lot about being very careful about where you get your information from.
Okay.
Don't just blindly follow tips and rumors or even what some professional is saying. He wants us to think for ourselves.
Right.
Develop those analytical skills, you know?
Yeah, be independent.
Exactly. And he even says, all those research reports, sometimes they can be overwhelming.
Too much information.
Too much information.
Yeah.
And they don't always lead to the best ideas. He's more about, a focused approach.
Yep.
Using data, using those analytical tools to quickly identify the most promising companies. Don't waste time with, reading a million reports. Just get to the good stuff.
It's like using a metal detector, right?
Yeah.
You don't have to dig up the whole beach.
Exactly. You've just got to find the spot where the signal is strong.
Right. What else?
Well, I think it's important to mention, O'Neill, he really believes in the power of hard work.
Okay.
Persistence.
Yeah.
And having a positive attitude.
It's not just about luck.
No, it's not about luck at all.
It's about putting in the effort.
Putting in the effort, yeah.
Okay.
He even shares a list of his biggest winners in the book just to inspire people,
Right.
To show them, hey, look, these stocks had incredible gains. It's possible. It's not about privilege or anything like that. It's about putting in the work and having the right mindset.
Yeah, he really believes that anyone can do this.
Anyone.
Yeah.
If they're willing to put in the time and the effort.
Well, we've reached the end of our deep dive into William O'Neill's How to Make Money in Stocks.
We did it.
We did it, yeah.
It's been quite a journey.
It has. And, we covered a lot from CAN, SLIM, chart patterns, market trends, even the psychology of investing.
We went deep.
We did. But it's important to remember, this is just the beginning.
Yeah, this is just the starting point.
O'Neill's book, it's a fantastic guide. It lays the foundation.
The roadmap.
But the real learning, it comes from putting those ideas into practice.
Yeah, get out there, experiment.
Yeah.
Analyze your results.
Refine your approach.
Don't be afraid to make mistakes,
Yeah. Everybody makes mistakes.
That's how you learn.
That's how you learn. So to our listener, we encourage you to explore, dive deeper into O'Neill's work.
Yeah, develop your own investment philosophy.
Yeah. Remember, knowledge is power.
Especially when it comes to your money.
Especially when it comes to your money. Exactly. Thanks for joining us on this deep dive.
It's been a pleasure.
And until next time, happy investing.